All right. Hey, Rebel Bankers, it's Chris Noggle, and welcome back to the show. I am here with Ray and Christy, and this is going to be a really, really different episode and an exciting episode. Ray and Christy have a podcast called Both on Board. How many times have you guys ever heard one of the podcasts or any podcast for that matter, where you have a successful couple in the real estate game dominating it? Well, that's what we're going to talk about today. But before we get into their story, their journey, and talking about money, let's talk a little bit about you. You're on your journey too. You're on your journey to changing your life. Maybe it's through real estate. Maybe it's through a business that you have, but all things come down to money. And so many people make money a giant mountain in front of them, and they make that mountain so big and so impossible to climb, they stop and they never fulfill their dreams. That isn't going to be you, and this podcast is here to help you overcome that. So for you getting started on your journey to becoming a Rebel Banker, you got to get started, and you got to take that first leap. That first leap can start with just reading a book. Grab a copy of my book, The Private Money Guide, that teaches you where all the money is for all the deals you'll ever want to grab. And also meeting people like Ray and Christy who are in the money game. That's where you start. You get out there, you put yourself out there, and that's when things change. But with that being said, Ray and Christy, welcome to the show. I'm really excited to have you guys here. And let's start off. Just tell us a little bit about both of you. Tell us where you're at in business today. And then let's dive back in the past and talk a little bit about the journey.
Okay, so thank you for having us. We're excited to be here as well. So Ray and I have been working together for almost 9 years now. Been together 11 years. And prior to that, I was a teacher. So I was a fourth grade teacher. Ray was in the real estate space already, and something just started to shift in me where I just wasn't feeling happy or fulfilled, and I was just not in a good place. And just one thing led to another, and I decided to get into the real estate business with him, and we started to build our wholesale business along with our flip business. And then from there, we got into owning rental properties. And we shifted that now into the private lending space. And currently what we're doing is just figuring out what the next fun step is for us in this journey we call life. And we have a 3-year-old daughter. So that obviously shifted a lot of things within our business and within our relationship. And now we just started our very own podcast, Both on Board. We've been at it for about a month now. And it's just been fun to just share our story and help other people. There's so many people in the real estate space that actually do work together. We weren't aware of how many there were, but there are quite a few. And it's just a fun environment to be able to do it together and just pursue our dreams. So we're just excited to be sharing that message with all of you now.
That's fantastic. And that's what we're going to dive into today, is a little bit about that message. And, we share a lot in common because my wife and I, Larissa and I, started in this business. I started in real estate before her, but then once she came into it, that's when things really started rocketing up. And it wasn't easy, and I'm sure you guys talk about a lot of how difficult it was with both of you working in the same business on your podcast, Both on Board. But, it wasn't easy for us either, but we finally kind of each settled into our own niche and our own, comfort zone. And now it's just like a rocket ship straight up, which I know we're going to talk a little bit about your rocket ship. But before we do that, let's take a trip back in time. Let's go back to the beginnings. When you first did your first few deals, how did you hear about real estate? What landed you both in real estate? And just tell me the story. Let's hear it.
So I started in real estate first. I'm going to see if I could move you so we could do two things at once. I like your setup a little bit better, and that way we can just talk right into the mic. Is that better? Yeah, that's good. So, man, our story is we started in real estate. I was working corporate for General Electric, so I was on their financial management program. So you and I probably have a similar background in the financial management realm. So I learned controllership accounting, my degree's in economics. So I love market cycles, understanding markets, understanding why things happen, understanding shifts, right? So, and then I got into GE, did, again, all that there, did the financial management program for 3 years, figured out corporate wasn't for me. And then I started buying some rentals in Connecticut. I was living in Connecticut at the time. Born and raised Miami. So it gives you, I never seen snow until I was 22, 23, right? So
come on up to Buffalo.
Yeah. Moved out there, did that for 3 years, joined a local RIA, invested with some guys. I invested like kind of like a bunch of smoke and mirrors, 60 grand at that time, but I've always been a saver. So Chris, you can relate to that in terms of the money principle. I think one of the first principles is you have to be a good steward yourself first, right? So I learned to save, delay gratification, and then I invested with them, lost the money. I said, you know what, I'm in on this already, but out of every great loss comes a great opportunity, right? So I met my first partner, Ed Oliver, from that. So again, is it happening for you or is it happening to you? So I knew that everything was happening for me. I couldn't phrase that back then, and yet I knew it was. So I met him. We bought a couple of deals together. We're like 90 minutes from where I was. So he helped me, great mentor. We still talk to this day. He's like a father to me, and we still do deals together. So did that for a little bit. Then I said, all right, I'm going to need some capital to replace the income I had because the rentals weren't doing it. I had like 40, 50 rentals by the time I quit GE, or GE let me go. They blessed me and kind of got me off program. So then, you know, I sent out my first marketing campaign out there and did a couple of deals. And I said, man, we just made 30, 40 grand, where it would have taken me a year to do that with the rentals and a lot less headaches. So I did that for a little bit. And then I said, you know what? I just want to move back. I want quality of life. So I came back here to Miami, and I couldn't buy and hold down here. The market didn't allow it. Like, you know, you were buying things that didn't make sense. So at that point, I just shifted strategies. And that's something you'll see throughout our talk. We're always quick to shift strategies, given our life season and giving the market season, right? So understanding what season you're in for both your life and the market, and figuring out that perfect marriage. So came back down here, started wholesaling, did a lot of that. Market shifted our strategy again to working instead of sellers, working with buyers. We didn't get hit too hard, but I saw a lot of guys in the last correction down here in Miami. You know, out of 20 guys that were doing this full time, 2 or 3 were left, maybe less. And out of those, maybe 1 or 2 are still doing it today. So I learned markets happen. So, you know, how do you figure out where you're at in the market, and not market timing, but much more so specifically in knowing that you're closer to a bottom and you're closer to a top, and not trying to time anything, but just figuring out, you know, what's the sentiment, right? Is everyone being, you know, go. And then what's happening is the players are new. It's not the same players that lost 50, 100 mil before. They're new guys that haven't been through the cycle, right? So they're not preparing for it. Made it through that cycle, shifted our whole business. And then we made some money through that cycle. But at that point, I didn't need the extra revenue. And at that time, the margins got depressed so much that I said, you know what? I've got enough cash flow. I'm going to just chill for a little bit and take some time for me, because I had just worked it so hard from 05 to really 08. And then I said, I'm going to chill. I'm going to move to South Beach. I'm going to pimp out my life. I'm going to get a personal trainer and buy a brand new BMW, because I was living like a miser, straight up, living in my dad's house, like just nothing, right? Just stacking and packing, baby. And I started to go pimp my life. And then like 2 weeks into pimping my life, I meet her. And I go, dang, universe, you got something, man. I was getting it working, but I met the best blessing of my life. And she was working at school, and she was unhappy with what she was doing. I saw some entrepreneurial spirit in her, in terms of she wanted to do like an MLM. And at that point, I was just playing semi-pro beach volleyball, working out, and just kind of like reading. I've always been reading and growing and looking at cycles, but just chilling. And I said, babe, we can do this real estate thing. I've already paid the 10,000 hours. I've already paid my dues here. We could do this MLM thing. It's going to take us time and everything else. Or we could just hit the easier button in real estate and really help people. And I've already paid the dues there, and we can make a lot more money faster to help us live the lifestyle we want. So let's say it's 2011, 2010. We took a trip to Australia for 21 days. Because at first, when we first met, she didn't believe it was daddy's money. She thought it was mommy's and daddy's money. She didn't know it was my money. And then, which now is ours, right? So at that point, I said, let's go to Australia. And at that point, Australia was very, very expensive, not just the exchange, but everything else. Let's go to Australia. I go, all right, well, let's do Australia. Let's go to 4 different cities, and let's really do it right. And we went to a Tony Robbins Date with Destiny seminar there. And at that point, she realized that she wasn't happy. And I made some breakthroughs too. And I go, babe, just quit and come join, you know, let's do this together. And, you know, she quit. You know, and we just started doing it together. We started doing some REO deals, started working together. We had some struggles like everything else. And I didn't know how to do an REO deals. I'd never done one, but I didn't tell her that. we figured it out. We worked late, got up early, and we had some struggles like everybody else. We built up an office, started hiring a team, started getting into the rentals, started getting into hiring a team to fix and flip, manage the property. We scaled out to about 100 rentals, maybe 20, 30 deals a year, which doesn't sound like a lot. And we didn't want to do a lot. We were closing on everything, and we were making very good margins. We were making 40, 50 a deal. There's no need to do a ton of volume, right? So, which let us have lifestyle. And what else? We sold all the rentals. Come 17, 18, we sold the rentals for a couple reasons. One, our daughter, that was the biggest reason. I missed that whole first year of our daughter. The market had giveth us a lot of equity, and I realized, and I've always known this, that the real money is in the appreciation of the market. Not that you're banking on appreciation, is that you're buying low in the cycle, the market's coming up, right? So now you've got all that equity that you have unrealized. And what happens is a lot of guys leave that equity in there unrealized. We have two options. We can sell and capture that equity, or we can leave it, or we can refinance. But at this point, we weren't making a whole lot of cash flow either, because what I've learned about rentals is the cash flow is what I call consistently inconsistent, right? Whereas if I do a note and a mortgage, it's much more consistently, it is. You have a tenant doesn't pay, you have a hot water heater. This, right now I've got from the few we have left, I've got a septic that blew up. Like you can count on it to be consistently inconsistent. Right. And for us, it's a struggle. Again, it's for us. I know people that love this, and for us, it wasn't our cup of tea. The rentals did what they were supposed to do, right? Which was take off. And in a lot of markets, you're seeing that now too, Chris. These properties that you bought for cheap have done what you wanted them to do. The real money is made. Cash flow is what you use to survive, which really make the money on that appreciation. Now you can make, it's your money. It's your unrealized gain. Make sure you realize it, whether through a liquidity event, whether it's a refinance and or a sell, but make sure you capture that equity because it's yours.
I say it all the time, and I don't know how much people actually listen. I always like to think people are listening, but Warren Buffett knows a thing or two, and I think he's proved that. And he says it so simply: buy low, sell high, and don't lose money. But people are like, oh yeah, I got that. I got it. I just got to buy low and I got to sell high, and then I got to not lose money. Got it. No, you don't have it, because if you had it, you'd be out of the markets. You'd be out of stocks right now. You'd probably be selling some of your real estate, especially the high equity stuff, and you'd be not losing money, because that's the only way to do it. It doesn't work with you thinking you understand it. It works when you actually do it. And you did that. You both did that. And that's, I think, some of the things I'm most excited about getting into in a moment is kind of where we're at now. And you studied market patterns, and I don't know if you watched the episode I did for the Real Estate Money School on market patterns, but that's what I did for 16 years as a high-level financial advisor. I studied the markets, I studied patterns, and we literally had teams that's all we did. And predicting the market is actually way simpler than people want to make it, but people ignore it. And it's like, you guys are in Miami, right? When there's a hurricane coming, what do? News comes on, news flash, warning, there's a hurricane coming. How do you prepare? What do you do?
We go get water, we get our shutters up, we get gas in the car. Hold on, the phone's ringing. We do all the stuff that needs to get done to protect ourselves.
Absolutely. You prepare, right?
Yeah, prepare.
Yet when there's a market storm coming and everybody can see that the markets are slowing down, stock markets are showing weakness, they're at all-time highs, the yield curve just went inverted, you have an inverted yield curve. That's not good, just for anyone that's listening to this. And you got all these signs. Real estate across the nation is starting to show weakness, and now it's becoming more of a buyer's market for the first time. It's always been a seller's market. Mm-hmm. Ding, ding, ding. It's like time is now to take the gains off the table. But then people make excuses. Oh, well, I don't want to pay the government taxes. Great. Don't pay the government taxes and just lose money, because that's a much smarter idea, right? That sounds great.
I love what you said about the inverted yield curve. I mean, Chris, you'd be surprised how much. I was explaining this to her yesterday, how with bonds and everything else, we were having breakfast yesterday at a spot, and I was explaining to her, hey, babe, it doesn't make sense at a 2-month, 3-month T-bill that you're going to get more return there than you are at a 10-year or a 30-year.
Or a 30-year. That's scary.
And the Federal Reserve controls the short end of the curve, right, which is kind of the Fed funds rate. But and they don't realize the size of the bond market. I mean, we can get into this. My thing is, people aren't realizing that whenever the yield curves inverts, always so far. You've had a recession 18 to 24
Every
months from
single
then.
time.
Every single time.
Every single time. And
Right.
then couple that with the simplest thing that everybody should just know. The markets have cycles, just like weather has cycles. There's spring, there's summer, there's fall, there's winter. I think in Miami, you get one season all year. You get summer all year. But here in Buffalo, we're supposed to get 4 seasons. Lately, it's been like 3, or actually, we just call it winter and then summer. But anyway, we're cycles, right? And you can predict it. Well, the same type of cycle happens in the markets, and it's 7 to 10 years. And you don't even need to be good at finance or even math to understand how long it's been since 2008. Let's think. It's past 10 years. It's game over. So you were smart enough to know this, but you come from a finance background. So you made some decisions here. And I know we talked about it before we went on here, but let's talk about those decisions you made and what you're doing now in the real estate business, because you're still focused on real estate, but in a completely different way. And I love this topic. Not only is it my topic, what we do here, what we're passionate about, but it's also something that I think there is a massive misconception about how this works. So tell them where you're at now and why you made these decisions.
Well, I think I definitely will get into that, but I wanted to add to that when you say cycles and seasons. I think that the other thing that we've learned besides the market cycles, we also as humans, right, as people, as couples, as parents, right, we go through seasons as well. And I think that was one of the things that really got us clear on what we wanted to do next and what we continue to do, moving forward, is we go through cycles as well. And there was times where it was, when we first got together, we didn't have anything to worry about. So it was all hustle, hustle and grind. Let's kill the business. Let's grow the business. Let's hire the people. Let's do all that stuff. And then we got into the season of, okay, now we're having a baby, and what we wanted was time and to be able to, see her grow up and do all that stuff. So we go through these cycles as well. So I think marrying those two things for us was one of the biggest, secrets that we, love to share with people. Is it's not just what's going on out there, it's what's going on in here. And when you marry those two, it's just magical, because that's when you really get clear on, okay, well, yes, this is what's going on, and this is what's going on in here, and then what's our next steps, or what are we going to put in place, what's going to be the game plan to get there. And that's what we did within our business, to go from saying, okay, we love rentals, we thought we loved rentals, right? we wanted this portfolio because we wanted, like, that was our vision was, let's have a bunch of rental properties and live off the cash flow. That's probably one of the main reasons people get into real estate. But what we realized was, it wasn't just cash flow. There was a lack of cash flow, and there was also all the headaches that came along with having all these rental properties. And for us, it was a little different, because we had single family houses, we had duplexes, triplexes. Then once we had our biggest unit was an 18 unit, we saw, wow, this is so much easier, all 18 units under one roof. So you kind of go through these cycles, and you learn all these things, and you see what's working and what's not working, and then you go from there. And that's what happened to us with the rentals. We got to that place where we had the rentals, and it all looked really nice. Like Ray said, it looks good on a spreadsheet. But then when it doesn't, actually happen in real life, where people actually pay on time, there's no evictions, there's no repairs.
You didn't send them the text. You didn't send the tenants a text to follow our Excel spreadsheet.
They forgot. They didn't notice that they had to follow the spreadsheet. And then taking that and then seeing, okay, now we're parents. Now we want to be with our daughter. All of that came into play. And then on top of that, seeing our unique ability, realizing we don't like managing tenants. We don't like managing people. We're not into the operating side of the business. We don't like that. We like to create, and we like to connect. And we got really clear on what we were good at and what we wanted to do with our lives and what we wanted to spend our time doing, and knowing that that's going to shift eventually. Like, eventually we might go and buy a big multifamily property, because then the right market, that right time in the market, we're ready for it, we're better prepared. But it's this constant continuous evolution that we're on, that once you get clear that that's okay and that's normal, then things become a lot easier, and they flow a lot more smoothly.
Yeah, I think I love what she said. I think that looking at the season you're in right now, and so rather than let the external world dictate the internal world, let the internal world dictate the external world. Figure out what season you're in, right? Figure out what your unique ability is. I call it the unique ability wealth path. Everyone has got a wealth path. So to climb up the mountain you're talking about, the money mountain, you're going to need your own path. Sure, you can mirror Chris's path, our path, whatever path is right for you, but you have a certain set of skills and unique abilities that God gave you to, and that's your path, and follow your path. It's going to be the path of most allowance, or like Esther Hicks says, the path of least resistance. So that's one. Two, managing your emotional state. Once you know what your unique ability is and where you're at, I think the emotional state of gratitude and appreciation and making sure that you're not in fear when there is an opportunity. Because in 08, 09, I was in fear a lot, and I was in scarcity because I had got I've gotten burned a little bit. So managing your emotional state. So everyone looks at what Warren Buffett says, but to actually do and be what Warren Buffett does, more being than less doing. Because yeah, you can see what he's doing, but dude, the guy's got some gusto,
You can say
nuts. Yeah, he's got that, and that's what you have to have, right? Because you're buying when no one else is buying. Yeah. So again,
you're selling when no one else.
You're selling when no one else is selling. When everybody, this party's going to go on forever, right? So you really have to have your emotional and inner game handled, because the outer game is always a reflection of the inner game.
So on that exact thing with life's cycles, tailing on to market cycles and just decisions on how to follow the rules of engagement, which seems so simple when written on paper, right? Like you just said, Warren Buffett seems so easy, right? Okay, got it. Be greedy when others are fearful. Be fearful when others are greedy. Take yourself back to 2008, 9, and 10. How were you feeling back then? I mean, you didn't want to buy. You were thinking, holy cow, this whole thing's going to fall apart. I don't know where the bottom is. Why would I buy? But now you look back on that and you're like, I shoulda, I coulda, I woulda, I should have doubled it, 10x'd it, 100x'd it, and my whole life would be different. But we always say that. Everybody always says that. We try to like live in the now, but we're always looking into the past, when really right now is all that matters. This is the only thing you can control. And if you don't take action right now like you did, if you don't take some serious, hard actions right now, you're going to be, again, down 5-10 years saying, I shoulda, I coulda, I woulda, because you won't be ready for it. Just like if you had a hurricane coming or you had a life cycle coming and you didn't prepare for it, you know, with having a daughter. I mean, me and my wife, we don't have any kids yet, but we're trying. But, you know, when we know we're going to plan for that. We're not going to just be like, well, we'll just wing it, you know, or when it comes, we'll figure it out. No, you got to plan for these things, just like this right now. This is a pivotal moment, and I wish we could get out to hundreds of millions, if not billions of people, to just tell this one simple message. This is probably one of the most important times in most people's lives, right here and right now, because we are at the top, and the only place it's going to go is down. And when it goes down, you can either be scared of it, you can kind of be really fearful and live fear your whole way down, or you can be optimistic and prepare and realize that the biggest opportunity of your life might be coming in the next 6 months to a year. And then when you're sitting there and you're ready for something, you can take action and you can take advantage of every opportunity that comes at you, instead of saying, oh, wow, darn it, I knew I should have done this. Mm-hmm. I mean, it's so simple, but it's so hard because it's mindset. You said that earlier, Ray. You mentioned mindset. That's the problem. Yep. Got to get in the right mindset. So,
well, mindset and also heart set, right? Heart set, right? Because everyone, you know, like where you're emotionally, right? Where are you living emotionally? Where's your spirit? Because the truth is, you know this, Chris, there's opportunities in every point of the cycle. So right now, multifamily's hot. Yeah. But if you're out there banging on doors, like my buddy Tim Bratz is, the one he was at the event, mm-hmm. You can find deals. So if you're out there banging and you're out there looking and you're out there mitigating risk, because what we do full time right now is mitigate risk for a living, right? Again, not eliminate risk, but mitigate risk. Mm-hmm. If you can mitigate risk, the upside takes care of itself. And guys, there's always opportunity at every point of the cycle. So really where our spirit has evolved to right now for both of us is, how do we enjoy every season? And I love your watch. It says now, the time is now. How do you find joy in every moment? Well, find something to appreciate and be grateful for now in every moment, and enjoy the dang ride. In winter, you can go skiing. I mean, look what they do in Buffalo. I'm not a big fan of it personally, right? I like tanning, right? You know, so, but what I'm saying is really, guys, is no thing outside of you is going to give you that joy you're looking for, right? That's an internal game. And once you win that game, the outer game's a lot easier to win.
Exactly. And today you're both in the money game. So I remember back in 2014 when my wife and I went to our first real estate big convention where we spent all that money to go to one of those trainings. And I remember sitting there and I remember looking at all these people I put up on a pedestal and saying, I want what they have. And you know what they were? They were the bank. They were the ones lending money. They were the private lenders, the hard money lenders. And I'm like, oh my God, how awesome would that be to be the bank? But all the time back then I kept thinking, oh my gosh, I can't be the bank if I don't have money. So we got to flip our way. We got to flip our way to having a whole bunch of money. And then when we got a whole bunch of money, then we can loan our money out and then we can be the bank, right? That was our trajectory. Boy, was I drinking the Kool-Aid or what? And then somewhere along that path, I'm like, wait a second, hold on. Banks don't use their own money. They use everybody else's money. So why am I waiting till I have all the money that I think I need to lend when I could just be using other people's money, helping them while I help myself get the lifestyle? That's the game you're in. So let's talk about the money game and what you do. And I know you mitigate risk, but go deeper. Like, help the audience understand what being in the money game means.
You take this.
Money on money. It's money on money. You're making money by managing money and managing risk. So I think that well, Chris, let's acknowledge you first, because a lot of guys are tied, and gals are tied to the vehicle. They're tied to what Robert Kiyosaki calls the wheelbarrow. They're tied to, hey, I've got to make money this way because the only way to do cash flow is through rentals, or the only way to do cash flow is through commercial. Why do you think the banks are in the money business? The money's in the money, right? So you can make cash flow. Like, ultimately, we got into this game to help people and for cash flow, right? Consistent. Really, let's get some clarity. Monthly, consistent cash flow. And we're okay with it with some kind of hybrid, because I don't know that we're at 100% passive. Like, this idea of you're going to go to, palm trees and sunsets and do nothing, I think that's a myth, especially for people that are managing money and you want to be involved, right? And then all that requires, right? You being a good steward yourself, you saving your own capital, you placing your capital and aligning interest of your borrowers and your lenders, everything together to make that work. So you understanding what money really is. What money really is someone stored labor after taxes. Someone went out there and squirreled away 30, 40, 50, 200 grand over their years of life, paid taxes on that, saved it, and is now giving it to you so you could be a great steward, right? So really understanding that, making that, super serious. And again, we care. So this is something we're looking at daily, and we're looking to grow and expand. And for us, it's been a unique ability mitigating risk. And it's also been a function of our network, and we've expanded into this. We know the benefit to us now on the money side is we've done both. So I wouldn't trade the wholesaling and the rehab for anything, is because now I know if someone's telling me a story or not, where they're at in their cycle, because we've been through that cycle. So in a quick 2 to 5 minutes, I can tell where they're at, and can I mitigate the risk and or provide more upside? Really, 1 is quantify it, 2, mitigate it, and then 3, can I risk reward it? Can I price it in a way where the risk is worth the reward?
Yeah, no, that's very, very well said. But it works, right? You've kind of overcome that. It was a learning curve. So I know for me, at the beginning, it was such a difficult thing to see, but then there's just that learning curve, and you learn that and you kind of dabble into it. But you did that natural progression. You came from, the world of rentals, then flips and wholesale, and I might have them in the wrong order. And then you learned how that worked. So you almost learned how to underwrite a deal. Especially being a wholesaler, you learn how the acquisition part goes, which is almost the most important thing on the money side, I think, because if somebody buys it wrong, they're not in a good place, and they're not a good risk. And then you learned that, and you took that, and you just applied that to the money game. And I admire it tremendously, because there's so few people that have walked that walk and actually talk that talk now. And I think it's amazing. I think there's a ton of wholesalers out there. It's a big thing. It's a low barrier of entry for an investor trying to get into the game. And I know there's a lot of people talking about wholesale, but what do you think is going to happen in wholesale when the market turns? Like, I'm just looking for your opinion, because I have mixed views.
Yeah, I'll answer that, but I want to give your listeners a little bit of insight on how we run the loan business too.
Yes, please.
There's no right or wrong. You can be transactional or you can be relationship-based. We're relationship-based. I've seen all models work. So what we do is character, competence, collateral. I look at the character first. You can't do a good deal with a person who doesn't align with your core values, right? And they're not wrong, we're not right, but if they don't align with your core values, the way you look at things, the way you look at opportunities, they're never going to get it, right? It's first hurdle. Second hurdle, competence. Where are they in that cycle? How good are they? What have they done? Where are they at? And then lastly, I'll look at the actual collateral and look at the market and look at everything else. But I find that that character piece is the biggest. Is whenever I've got a headache, it's always been they didn't align with my core values. Always.
Character flaw.
Yeah, and not a flaw, just not in alignment.
Okay.
Right, the energy was off, not in alignment, not a flaw. Just look, that's not how I view the world. Some guys they want to squeeze everything. I just want to squeeze the right things. Mm-hmm. I want to squeeze ROI. I'm not looking to beat up everybody along the way.
I like that. And then, so just a lot of the people listening to this are probably they're really into this because it's money and that's kind of what they need. And they now know that you're a lender. So how do you look at people? How do you look at those different criteria and judge somebody? So if one of our listeners was someone saying, oh, I would love to start working with you, how would they align with you? What are the things you look for? Go one step deeper into that.
Yeah. So one step deep on the core values. So I have a whole, I've already created a loan system to help other people that have capital, want to place their capital directly where they want to be the active. Cause I tell them, look, if you just want to place your capital somewhere else and have a professional do it, you can give your capital to someone and they can place hard money loans. Or if you want to do it yourself, but here's what we've done, right? Procedures, everything, underwriting, everything, right? How we track everything, all that. So in terms of core values, we just look at our own core values. I'm loyal. I'm looking for someone to be generous, meaning that they're not going to go somewhere else because someone's giving them a percent or two, right? They're willing to have things be easy with me, and they're willing to kind of share the beans. What else? Loyal, integrity. They do what they're going to say they're going to do. What else, babe? There's a whole bunch of them that I have there. That they're not complicated, that they're easy to do business with, that they're easy to work with, that they do what they say they're going to do, that they get me everything I need. So what I can find that they're organized, for example, is one of these things. And this list of core values is changing as every mistake we made is a blessing in that we can learn something from it. So what I do is I then put in a system. What did I learn from that person? That didn't go well. Well, you know what? It didn't work out because this person didn't really have that dialed in. So for example, I'm looking for someone that's already doing what we're funding. I don't want to fund someone who's going to go ahead and learn how to rehab on our dollar. That might be a great wholesaler, but you and I know this, Chris, is buying it right is one thing. And that's definitely a cure-all. And if they can't fix it right and on time and sell it, we're stuck with it, right? This plane is going to take off once we put money into it. Taking off is optional, but we're going to land, right? Because we have to, once the money's out, we're going to land. And so it's just been, again, it's been those pieces. So we just align with our core values and make sure that they're growing. I want to make sure that they're growing in a mastermind. Who are they part with? I'll learn more from that borrower by finding out who is in their circle and what they say about that person than I ever will from that person. And I want to hear their story. I want to hear what's going on. I want to hear where we can add value to them, and they've got to be coachable.
I love it. Those are some great core values. That's incredible. I love the plane analogy too, because when you said that, all of a sudden I'm sitting there thinking, sitting in a plane, getting ready to take off. All the plane really needs is a pilot, fuel, and two engines that are going to take the thing off, right? But then when it's in the air and it's got to land, that's where the skill really comes. And that's what you're talking about, like the rehab and the experience and just the ability to actually get it over the finish line. You've done flips. We've done flips. Hey, it all seems easy. Too many people are watching too many TV shows, ours included. It's like we were just as guilty as everybody else. We had a show, and it makes it 20, what is it? The runtime, 23 minutes makes it look really simple, but it's not. It might be easy getting all the way to the end, but that last 5%, my gosh, that is the hardest freaking thing in the world to get that house over the finish line. And that's where most people fall on their face. And you got to.
Yeah. One thing that's funny about HGTV, I used to tell like new rehabbers, I go, you know what's happening to all these guys? They're watching they're getting high, watching too much HGTV. They're thinking they can do it. And that's what I would tell them. And I go, you're better off wholesaling, but they don't listen to me. You want to hear a good wholesaler? Hey, I'm killing the game wholesaling. All right, I'm going to get into some rehabs because I'm looking at the other grass where the grass is supposedly greener. Yeah. And I go, you're about to lose money.
Exactly.
And sure enough, it always happens, right? They just lose money. So, just is what it is. And in terms of to answer your first question on the wholesalers, what I think is going to happen to wholesalers, margins are going to compress. I have data. So I track data. Same thing with you to track markets. Mm-hmm. Margins compress. So are you set up to have margins compress? Are you set up to work with new buyers? Are you set up to be nimble when the market does have a shift? And can you now build more volume, right? And do you have cash reserves?
That's the important thing.
To go in. Yeah. Do you have some cash reserves?
Yep. A lot of the wholesalers coming in, like it seems easy when the market's at the top and everybody's buying and everybody wants stuff, and that's just what Warren Buffett says, right? When everybody's rushing to something, Warren is rushing away from it. He's like, all right, this is my time to exit this. Folks, that's what's happening right now. I mean, I see it because we have an education company. I see all the people coming in that are just like, oh, I want to get into this. I want to flip houses. I want to get into wholesale. I want to do this, that, and the other thing. And I'm just like, wow, where were you 4 years ago? Because that's when you should have been getting in, or even 3 years ago. Not saying that there's an opportunity now, but boy, you got to be skilled. And everybody rushing in, a lot of people, the smart money is rushing out and just going to sit on the top and do what you're doing and just pick and choose and be really smart about it. So one thing we didn't touch that, because this is way off topic from what we do, just so the audience knows. And I know a lot of you watching this right now, you're used to like the standard format of like the journey, and this is off topic. And I'm going to even take it further off topic because, hey, I write the rules here and this is fun. This is a couple. You guys are a couple doing this. Talk about that. And I want to get people interested in the couple side of it, because I'm sure there's a whole bunch of people out there that are listening to this that are thinking about getting into this with their spouse or their fiance or someone that they're close with. They want to get into it and have a partner in this business. And I know this is all what your podcast is about. So what's that been like for you?
Well, you take that one. You're better
Well, I
at
think
that.
to even broaden that, because our niche, quote unquote, because it's what we know and what we do, it's real estate investors and entrepreneurs. But I think one of our biggest aha moments was when I was teaching and we had already decided, okay, I'm planning my exit, and he was getting back into the real estate, and it was like a complete disconnect, because I would come home and I would talk about teaching and the kids and the administration and the testing. And it was like, he would just glaze over, and vice versa. He would talk to me about, oh, the seller and they didn't show up for the appointment and this. And again, I would just be like, whatever, you got to wake up at whatever time you wanted. Like, who cares? And it was just this complete, and now we think back, because now we're recording these podcast episodes, and we're going back and retracing our steps. And like, it was just complete disconnect. Like, it was just, I didn't get his world. He didn't get my world. Obviously we got along and we had a good time together, and our relationship was starting up back then, but there was just nothing there when it came to our careers and what we were doing for 8-10 hours of our day. And now we see it. And now it's just funny, because people tell us, oh, what's the work-life separation? Like, how do you guys, create, times where you don't talk about business? And like, we don't not talk about business. Like, it's all together, and it's all one thing, and it's all our life. And we obviously worked, like you say, like all the obstacles, we worked very hard at getting to this place, but we've gotten to that point where, yeah, there's going to be days where I'm just going to be like, don't talk to me about that loan. Like, I don't want to hear it. Like, there's going to be moments of that, but for the most part, like, we just integrate all of it. And I think that's what, when you were saying like your rocket ship is just taking off, like once you get into that flow together, because think about it, you guys live together, you're choosing to spend the rest of your life together. So even if you're not in the same business, even if it's not something that you're both in real estate, maybe one's in, an MLM, and like, well, we kind of did that for a while, and he was in real estate, but at least we were speaking the same language, because we were both growing something. We were both heading in that same direction of freedom, of lifestyle, of the quality of our time, like that, buying our time back. Like when you start to speak that same language, it's just like you said, it's exponential growth. Like, there's no way up, nowhere to go but up, right? And for us, at least, like seeing like our parents' relationship, right, which is what most people either model or run away from. You see what they did, and then you see the things that they did that you didn't like, right? And then you try to incorporate that into your relationship, or you do the same thing because that's all you know. And for us, like, we've been very, very intentional on what we're doing and how we're doing it. And then now having our daughter, it's even more of a fire under our butts to say, okay, well, like, we want to make this work, and we want to make this really be something that we're proud of, and that we love to wake up in the morning. We call it a life we don't need a vacation from, because that's what we're currently living. And yes, it took a long time, and if you want a lot more detail, the podcast gets into all of the stuff that we have been through and that we continue to go through, because it's still an evolution. Like, we're still growing through a lot of different things. So people say, oh, you guys have, oh, you made it, right? You got the loan business. Yeah, but then once you get there, it's like, okay, what's next, right? And
Journey's just beginning.
Yeah, like it's just starting and it's evolving, and like that's why we love talking about seasons, and we love, obviously Ray is obsessed with market cycles, and we just continue to grow and evolve. But it's just knowing that we're in it together and that we understand each other fully. It just makes it not to, you know, be, what is it, like, not to be corny, but it's just smooth sailing. Like it's just much more smooth. Like it's not that we don't fight, and it's not that we don't have issues, and it's not that we don't have bad days, but they're fewer and far between, and they're much easier to bounce back from. And I think that's what kind of our message is, and our intention is with this podcast and whatever we're going to do next. I'm writing a book on it. We're looking to do retreats. Like it's just really getting on the same page with someone and knowing that no matter what, you're supported and you have each other's back, and you guys live in the same household. So it's you're either, you know, like crabs in a bucket, like you're pulling each other down or you're lifting each other up. There's no really in between.
Wow, Christy, nailed it. If I could like seriously give you a high five, there it is.
A virtual boom.
Virtual boom, nailed it. Like I don't even know how to say anything else. That's right there.
I think one thing I would add to her, I love what she said, babe.
Hold on. He's still
No,
praising me.
go ahead, Ray. Go ahead.
Is really what it's done is, if I can sum it to one word, is alignment, right? This idea of you've got two horses, and if you get two horses, this idea, if you get two Clydesdale horses, you're gonna have them pull something together. Well, if you train them individually, you pull them together, what is it, 7,000 pounds?
Apart, they can do 7,000 pounds. Together,
alone, they can do 7,000 pounds each, right?
Together, they can do 15. So it helps.
Right.
But if you train them together and you like let them know, okay, this is what we're doing, this is what we want to do, and you coach them enough to
and
realize
they work together,
that they want to work together, the alignment and everything creates. I think it's like 24,000.
The align. So get that, guys. When you're aligned, you can do 24,000. So what I'm saying is, a lot of couples are saying, "Oh, how do you do it?" My question to them is, how do you not do it?
Exactly. That's what I would say.
Like, yeah. How do you not do it? How do you have disalignment? Yeah.
Because even if you're not working in the same business, like, you know, both of us are, even if you're in two totally separate businesses, the goal, the big goal needs to be the same, and it needs to be aligned, because you have to be both working toward that. I don't care if one person's a nurse, one person's a real estate investor, whatever it is, that goal up there has got to be the same. Otherwise, you know what happens. I mean, it's pretty much a growing problem in the world, not just the United States. It's the big D word. Like, that's what happens. If you're not aligned to what the big picture is, you're never going to make it. And if you just
she has her own path to the big picture, and I have mine. So like, you and your wife Larissa has hers.
Absolutely.
Because it's not just the big picture; it's the day to day. Because who cares what the goal is if you're suffering through it and you're fighting through it and you're miserable. Like the point is to make the journey as you know, enticing and as fun as the destination. Because that's one of the things that we realized too with like money, just getting back to the money subject, like once we got the money that we thought we wanted or needed,
that we thought was going to make us happy,
it wasn't what we wanted. It like there was the happiness or the fulfillment, which is the big thing. It had nothing to do with the money. It had to do with how we were showing up, how we were communicating together, how we were growing, how we were living. It had nothing really to do with dollars in the bank, you know.
That's
so
true.
So I think
if a couple, or really anybody, makes money their only mission, it's going to be short-lived. It's going to be. It has to be about more than money. Like, you know, I know it's not all about money for you guys. Money's just a tool, and you're using that tool in the money game. And that's what it is. Money is just a means of exchange. Money for food, food for money, money for car, car for money. It's just a means of exchange. It's a tool, and you got to learn how to use that tool, and that's it. And people make it especially today with digital media. I mean, everybody's on there looking at the fancy cars. Everybody's taking pictures with their Rolex, their car, their mansion, you know, great. You know, pat them on the back, give them a big high five. But if their mind and their heart, I forget about the mind on this one. This is where your heart comes in more than anything. Yeah. If your heart's not in the right place, and that heart has to be to help other people get what they want, you're just going to crash and burn. The cars will go away. They'll be repoed. The house will be gone. I mean, you don't have to believe me today. Believe me, we do market cycles, right, Ray? I don't need to tell anybody to believe what I'm saying today. We'll just prove it in time, because you know what? When the next market cycle happens, the people that's hearts aren't in it, the people that aren't ready for it and didn't prepare for it, we're going to see what happens. Those Instagram stories might be a little bit different.
Mm-hmm.
Yeah, 100%. I mean, yeah.
All right. So as we're getting to the end of this episode, I want to ask you two things, okay? Two specific things, and I want it kind of as a group answer here for both of you. In this journey, when you first began till today, Okay. The whole thing, take it all, wrap it together. What was your biggest internal obstacle you had to overcome?
Internal.
It's always been me and my mindset, me and the lack consciousness, the scarcity mindset, which is something that we work on daily. The struggle, the lack consciousness, the living in a joyous state no matter what. I think Tony nailed this on the head, that you're going to make a decision to live in the present moment and be joyous no matter what happens. You're going to find something to be grateful for and something to appreciate no matter what.
That's awesome. All right. Second question.
Did you,
Christy, anything to add to that one?
I mean, I agreed with that. I think for me, the answer was just like diving into personal development and just like getting 100% here before here or anywhere else. Like just that step of like really getting myself to a place where, like he said, I was joyful, I was happy no matter what. Like once you win the internal game, everything shifts and everything just becomes so much better. So
awesome. All right. Second question. On the exact same kind of realm, the entire journey that you've been through, what was your biggest external obstacle?
Biggest external obstacle.
You know, for some people, external, it's financing, it's sourcing, it's the deal. I mean, there's a million different things. It's sometimes their family, their parents, the people that surround them. What was your biggest external obstacle that you had to overcome?
I think for us was just realizing that the business that we had, our flip business with our employees, with our, brick and mortar, like realizing that it just wasn't making us happy anymore, and knowing that we had to do something about it, like really diverging from the plan because it just wasn't working for us. Like that step of saying, okay, what is it that we really want? Like, what do we really want to do? And then having to come to grips with, closing our office, selling the properties.
Let me back up 1 second. It's not only what do we really want, baby, but also, and more importantly, not what do we really want. The first question before that, what do we really want, is who are we? Who are we really? We weren't operators. We were trying to be something that we were not. And then what do we really want? Right? We are not operators. We're investors. There's a difference. Operators run a business. Investors invest in a business. Right? Robert Kiyosaki, the cash flow quadrant. Right? So I think the biggest mistake, if we could kind of like simplify it, is, hey, we're not operators. So again, what is your unique ability? And then double and triple on that bad boy.
Yeah, it's awesome. That's awesome. All right. So with that being said, I know we've talked about a lot today, and I really appreciate diving deep, because I know some of this stuff, it's not stuff you talk about every day. You don't dive deep in, to really kind of tell I guess this could be the world, what is actually going on in your life and what your fears were and what almost stopped you and how you did it. That's the important stuff. That's what I look for. And I know that's what so many other people are looking for. And it's the truth. We're all living, this world in this life of the big lie. We are, whether you believe it or not, or hate me for saying that or don't, that's what so many of us are living, is the big lie. And this digs out the truth. And when you start living for the truth, that's when things really change. And you guys are doing that with your podcast, both on board. And I love it. And, I can't wait, if we get that day where me and my wife get to share some time on your podcast, I think that would be fantastic. But with that being said, for my audience, if they want to get a hold of you, if they want to kind of reach out to you about whatever, maybe it's becoming one of your preferred, people that borrow money from you, or they just want to go check out the podcast, how do they find you?
So it's on all the platforms, on iTunes, on Spotify, on everything. And it's both on board. And there at the bottom of the show notes, you'll find all our contact information, email, all
Insta,
our handles.
Facebook. Yep.
Yeah. And we're just open to, just connecting, and we love, meeting like-minded people. So just don't be afraid to reach out.
Yeah, send us a DM.
And I want to give a big shout out, because they were just telling me about this. When you go on and you check out Both on Board's podcast, check out episode 11. It's all about money. And I know a lot of you on here are looking to learn about money, and that is a great one. So make sure you check that out. So with that being said, all of you, I think you're going to get a lot of golden nuggets out of this. If you haven't, then you need to listen to it again. I think that's the only thing you have to do. And then share it. Tell people about this episode and go out there and take action. So on your journey to becoming a rebel banker, it takes one thing. It takes you taking action and getting started. So there's the resources. They're all around you. Tap into them. And you know what? Thank you so much for your time, for checking out this episode of the Real Estate Money School. And we'll see you next time. Talk to you soon.